Hi, I'm John Persinos, Editorial Director of Investing Daily. Welcome to my video presentation for Monday, January 29. To view our full range of trading services and publications, visit our website at investingdaily.com. Also, visit the website of our subsidiary, streetauthority.com. Political discourse during this year's presidential campaign season more closely resembles a WWE SmackDown than any sort of rational debate. You're hearing some politicians and pundits rant about the ravages of inflation and the dismal state of the economy. To put it bluntly, this narrative is a lie. Let's look at the facts and how they affect investors. The latest data confirm that inflation continues to dramatically fall and the economy is growing. Indeed, Americans got further good news on inflation and the economy last week. The U.S. Bureau of Economic Analysis reported last Friday that the gain in the Core Personal Consumption Expenditures Price Index, the PCE, which excludes the more volatile costs of food and energy, slowed to 2.9% year-over-year in December. The core PCE was up 0.2% on a month-over-month basis. While the general public more closely follows the Labor Department's Consumer Price Index, the CPI, Fed policymakers prefer the PCE because it adjusts for shifts in what consumers actually buy, while the CPI measures prices in the marketplace. Core measures provide a means by which monetary policymakers can separate the noise and short-run fluctuations in the data from the more persistent underlying trends. The Fed's interest rate tightening campaign has curbed inflation, but without causing a recession. The Bureau of Economic Analysis reported on January 25 that real, inflation-adjusted, U.S. gross domestic product, GDP, grew 2.5% year-over-year in 2023. Consumers continue to spend even with Fed interest rates at a 22-year high. As for corporate earnings, fourth quarter 2023 operating results have been lackluster and a mixed bag, but they haven't imploded. For Q4 2023, with 25% of S&P 500 companies reporting actual results, as of January 26th, 69% of S&P 500 companies have reported a positive earnings per share surprise, and 68% have reported a positive revenue surprise. For Q4 2023, the blended year-over-year earnings decline for the S&P 500 is minus 1.4%. However, if history is any guide, the final numbers will be higher than expectations. What's more, earnings growth is expected to accelerate in future quarters. Last week, the major U.S. equity indices closed higher as follows. The Dow Jones Industrial Average was up 0.6%, the S&P 500 Index was up 1.1%, and the tech-heavy NASDAQ rose 0.09%. The benchmark 10-year U.S. Treasury yield, the TNX, closed flat at 4.1%, but it's significant that the yield has risen past the 4% threshold, largely due to worries that geopolitical strife might disrupt supply chains again. Wall Street is keeping a nervous eye on the TNX. Crude oil prices jumped 6.6% last week as Houthi terrorism in the Red Sea caused concerns about the security of shipping lanes. Oil prices have been on a tear all month, a trend that could put some upward pressure on inflation, but so far the effects have been muted. The upshot? Prepare for a soft landing. Strong economic growth, falling inflation, and historically low unemployment are creating the Goldilocks scenario that investors like. Driven by these positive fundamental and technical factors, the benchmark SPY ETF hovers well above its 50 and 200-day moving averages. The broader market is showing considerable upward momentum. Now let's take a look at the week ahead. These important economic reports are scheduled for release in the coming days. S&P Case-Shiller Home Price Index, job openings, consumer confidence Tuesday, ADP employment, Fed interest rate decision Wednesday, initial jobless claims, S&P U.S. manufacturing PMI, ISM manufacturing Thursday, U.S. unemployment rate, hourly wages, factory orders, consumer sentiment Friday. The most important news will be the Fed's decision on the Fed funds rate. The betting on Wall Street is that the central bank will stand pat. After strong gains in 2023, the stock market continues its winning ways. Looking for an exceptional growth opportunity? Consider the tech giant Apple. But I'm not suggesting you actually buy Apple shares. On Friday, February 2nd, Apple is scheduled to release its new Vision Pro device, a headset that promises to shake up the augmented reality, virtual reality market. However, the tech analysts at Investing Daily have determined that this new Apple gadget is dependent on mission-critical software made by a tiny, under-the-radar tech innovator. If my colleagues are right, that's when a profit surge could start for this small software partner. To learn more, click the URL at the bottom of the article that accompanies this video on the Investing Daily website. And if you have any comments or questions, please don't hesitate to send an email to me at mailbag@investingdaily.com. Thanks so much for watching.